Welcome to the August 7th, 2023 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your weekly fast-paced tour of the global financial markets, and what a week it was. By the way, I'm President, McGowan Group Wealth Management. We serve affluent families from the Crescent right here in Dallas, and it is time for you to upgrade your investment plan because the next 2.5 years could look dramatically different than the last 2 years. And I'll tell you why as we go forward in this week's fast-paced tour. Look at this. What happened here? This is the price of a Treasury bond. On the evening of August 11th, Fitch Ratings Services downgraded the United States debt to AA+ from AAA and scolded the U.S. government for lack of a medium-term fiscal framework, basically saying they've got no self-control. Janet Yellen, who was actually Yellen default at the debt ceiling in May to help the negotiations spend more money, well, she was absolutely lambasted and angry even though she was Yellen default, which is not a good thing for the nation's CFO to do. Anyway, Treasury bonds sold off hard and globally, raising interest rates by 0.25% on long Treasuries in less than 48 hours. The Dow Jones Industrial Average initially genuflected by about 300 points and started to recover at the end of the week. The Dow, surprisingly, did not go below 35,200. Wow, that's strength. Now, what happened the last time S&P downgraded the United States in August of 2011? What was the market impact? Because it's a salacious headline. Well, here, the Treasury bond in white, okay? Now, we can see that the Dow Jones Industrial Average at the downgrade here in August of 2011, the Dow plummeted pretty quickly. Boom. That was a bad August for the Dow. But Treasury bonds, the price continued to go up. So the market was relatively unfazed, and the Dow recovered over the next 6 months or so until we got to 2013 when we had the end of quantitative easing. But that's a different story, and what this is telling you is that the impact in 2011 was temporary and not significant compared to what happened to the Dow. All right, this is oil inventory. So Cushing, Oklahoma, big old oil hub, and that's where they store the stuff. And you can see the inventory levels dropping below the 5-year average as you go into deficit. They're using up their surplus oil, and you could see we had an oversupply corresponding to oil hitting 62. This corresponds to oil hitting 82. And it could be that we see something like this. This was the invasion. And the invasion happened right here when you drew down the inventory and you had to restock it. So the price went up because there was restocking, a shortage, if you will. And this says energy infrastructure is poised to benefit for the rest of the year. It also happens to be a great inflation hedge. Earnings on the S&P 500, 420 out of 500 companies reported so far. Sales growth, well, it was flat. Earnings growth, it's a -8%. Wow. So, not good news for the stock valuations because you've had a rally at the same time. Earnings did not increase as expected this most recent quarter. However, the record cash flows of midstream pipeline assets are poised to raise the dividends, and the stock buybacks increase asset value that each share controls. We're going to cover that at NetWorthRadio.com in the recurrent interview. Now, this is global high yield. This is the best 30-year fixed income track record that I've been able to find. And you can see the impact of the tightening last year. This is a 32-year track record with a 9.5% average return. Right now, This asset class is trading at about 75 cents on the dollar compared to par value. What did I say at the beginning about the next 2.5 years? Federal Reserve's own projections are that they're going to come down, inflation's going to come down to normal, which it pretty much has, and at the same time, they're going to bring the cash rates over the next 2.5 years, according to their projections, from 5 something down to 2.5, which is a more normal cash rate. The net present value of future cash flow goes up, and bonds tend to drift back to par value. We got 4 good managers that are pretty good at picking bonds that don't default, and they're trading at about 75 cents on the dollar with yields, in some cases, close to 10%. That also is an asset class in our model portfolios, and you can contact us at networthradio.com about that model portfolio and updating your plan with McGowan Group Wealth Management. Thank you for tuning in. We'll be back next week. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.